Welcome to the Brian Murray Show, a real estate show, New Jersey style. I'm going to start the show talking about the single greatest real estate opportunity that I've come across in my 20 years of being a realtor and being involved as a real estate investor. It's called opportunity zones. You might have heard a little bit about them on the news in terms of being this thing that only rich people can take advantage of. It's a billionaire's loophole. It's designed to make rich people richer. And I'm here to tell you it's designed to make everyone richer. The big key things to an opportunity zone is this, that there are all of these zones all across the country in all 50 states, and there are areas that are a little bit economically depressed. They don't have to be the middle of the worst parts of the state. They can be areas that are designated by the state as needing economic opportunity. Locally, there's a great one right behind Liberty State Park. That's a zone you're probably seeing a lot of construction over there right now. But here's what happens in the opportunity zone and why it's awesome. So you have to take capital gains from the sale of property or stock, and you take just the gain portion and you invest it into real estate in one of these zones. And the benefits for you are this, that typically when you would sell something that has a long-term capital gain, you'll pay about 23.8% tax right away on that within the first tax year. If you invest it into an opportunity zone and meet a few of their rules, what happens is you defer that tax until 2026. So you're getting 6 to 7 years worth of tax deferral on that. Then you'll get a 10 to 15% basis point reduction on that 23.8%. So that'll knock it down to 20 to 21% tax that you're going to pay 6 to 7 years from now. Tax deferment and reduction alone makes it a great opportunity. But what knocks it out of the park and makes it a home run for everyone is that the money that you put into a property within the zone that you hold for 10 years, it grows tax-free, federally tax-free. So it's like a Roth IRA if you want to look at it as an investment instrument. Imagine taking a piece of property, a rental property, buying it there, holding it for 10 years, and then when you go to sell it, all of the appreciation in that property when you sell it is tax-free. It's way different than a 1031. It's got a lot of benefits that are completely different, and I suggest that you read up on it. I suggest you call somebody who knows something about it or somebody who's talking about it intelligently. It is the number one opportunity that I have come across in my time as a realtor or an investor. So today's hot topic is, will the market drop? Here's the thing, is that it's entirely possible the market will drop, but where's it going to drop to? At the end of 2018, the second half, really starting in about July, we had a correction or a drop. Across the board here, 7 to 10% was pretty standard in terms of drop. Now, what that truly corresponded to was that interest rates ticked up at that time, and everybody got panicky that, hey, all of a sudden interest rates are going higher. Maybe correspondingly prices will drop. Everybody kind of stopped buying, and then prices did drop because of that. And really what it was a lack of volume, of sales volume that happened or occurred at that time. So, in order to make your home sell when nobody's buying, you have to drop your price to a point where you're going to entice somebody to buy. And then in the back half of the year, right around December, when the interest rates finally settled down and everybody figured out what was going to go on there, all of a sudden, volume started to pick up again. But prices didn't come back. So we had prices go down when interest rates went up, and then when interest rates came back down, all of a sudden, prices didn't go back up. So are prices going to drop again? Well, the interest rates already went down. So, what that typically means is that prices go up not down when interest rates go down. In fact, a few of the experts out there are saying, hey, as soon as the money markets kind of catch up to the lower interest rates and they start lowering the rate that they're paying for money, then all of a sudden people are going to be looking where to put their investment dollars. And a lot of that's going to go back into real estate, which is going to push the market up, not down. So we had a drop when interest rates went up, interest rates went back down, prices haven't gone up yet, but down, I mean, it's fundamentals. Could they go down? Anything is possible. Could there be an external factor? But based on where we are today, when I look at the buyers out there, the sellers out there, and really what's going on in terms of the investors now coming into the market. Once the investment money comes into the market, it's almost like it kind of creates a floor so that, you know, where a price is going to go, as long as the investors can make enough money in the market, it almost puts a floor on that. And I think that's really where we are right now. So will prices drop? That's not where I'm betting. Thanks for watching The Hot Topic. This is Brian Murray with Ask the Expert. I'm here with Joe Berg from Pinnacle Mortgage. And Joe, buyers really want to understand what causes the rate to move.
That's another typical easy question that's made more complicated than it actually is. Interest rates move up and down like the stock market. We can't predict it. If I could, I'd be one rich man. But what I can tell you is when you hear the Fed cut interest rates, those are what are called short-term rates. While they do have an impact, which again, we still have difficulty sometimes figuring out which way it's going to go. A lot of times when you hear Fed cuts interest rates, you think rates are going down. That's not always the case. What I educate my clients and anybody that's working with me on is to look at CNBC in the morning. Follow the 10-year treasury rate and the 30-year MBS coupon. That's really kind of when you see that move 10 to 15 basis points, sometimes 20, up or down, you will see interest rates follow that up or down. So if the 10-year treasury is at, let's call it 2.19, and it goes from 2.19 down to 2, rates should follow down about 1/8 to 1/4%. It's not 100% accurate, but it's usually a very good indicator of which way it's going.
Great. Thanks, Joe.
You're
Appreciate
welcome.
it. This is Ask the Expert. The good, the bad, and the ugly. The good, electronic payments for rents. That's the good. I don't know if you've heard about Zelle or Venmo. If you're over the age of 25, well, actually 30, maybe you haven't heard of them, but certainly anybody under the age of 30, Venmo's the way to go. I mean, you can pay almost anything with it. You can pay the babysitter with it. You can share, you can pay drinks that your friends split with you for it. There's almost nothing that you can't pay. I actually paid for an HVAC with Venmo, so you can pay a lot of different things. But the best thing is that you can pay rent, or your renters can pay their rent directly into your account with Venmo. Zelle, the same thing. Zelle is owned by all the groups of the banks. So it's like a Venmo, but with the support and structure of all the banks on there. So it's a lot easier just to get that money right into your bank account. I really recommend it if you are a landlord and you're looking to collect rents. I mean, I am so tired of going to the bank with checks. I mean, who writes checks anymore? Really, what do you write them for? Some people have to write them for essentially the rent, and that's about it these days. You pay all of your utilities online, which you used to have to write checks for. Now, essentially, it's the rent. I mean, checks are basically going away. And once we get everybody onto electronic payments, then at that point, I think that you'll see that you won't ever write a check again. So check out Zelle, check out Venmo. That's the good. The bad. This week's the bad is real estate photos from realtors that think it's a good idea to shoot with their own iPhone. I'm not kidding. People do it. People still do it. People do it on very expensive homes. It's like they think they can come out there with their phone and say, oh, hey, look, let me take this picture and it's going to look awesome. Except that it's super dark and it's not in the right frame. And it's like, Really? Are you going to cheap out on the pictures? I don't even know what kind of people sign up with a realtor who uses their phone. When I had to find a realtor for a referral for someone out of state, the first thing I did is I went through and I looked at all of their listings and all of the pictures that they took. Because a picture is really your first listing. That's your first showing. When somebody comes to at 2 in the morning in their pajamas thinking about buying a home, what are they looking at? They're looking at pictures. Yeah, they'll watch a video or two, but essentially it's like, do I like this one? Do I like that one? Do I like this one? It's like swipe, 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 swipe. Oh, that one's nice. Hold on, let me date this one. Oh, different app, never mind. Swipe, 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 swipe. Oh, that's a nice picture. Let me go check that one out. Oh, that person took it with an iPhone. Everybody else is paying for professionals. I hire professional people to come up and take my pictures. They drive from an hour and a half away because they go above and beyond with what they do with the not only the lighting and the staging, but then the retouching of the photos and making sure everything is perfect and that everything is hidden out and that it's just awesome and everybody's gonna be like, wow, that's the best photo I've ever seen of that property. And I want my sellers to be like, oh my God, if my property looked that good, before I was going to sell it, I never would have sold it. I want to stay here. And I say, well, too bad you signed the paperwork, now move. But that's it. If you see realtors with iPhone pictures, run. And finally, the ugly. The ugly is wire fraud. It's a dumb topic, I know. Wire fraud is a dumb topic. Nobody wants to talk about it. Who would ever be a victim of wire fraud? Well, I've recently had a client, very smart guy, multiple degrees from great universities, very high-powered job, who came within a hair of being a victim of wire fraud. And those guys these are not people saying, hey, I'm the prince of, Wakanda and send me, $1 million. These people are very clever. They make the emails look like they come from your attorneys. They have ways of putting bots in there so that your attorney's emails are swamped. And they know just enough to make you believe that who you're sending the money to is real. And you're busy and you think that the email is real and you do it. Wire fraud, it's real. And it's easy to fall victim. My recommendation is never wire anything without talking to the person on the other end and double confirming the account numbers and that they asked for it and that it's coming and that you're getting it on the other side. Never, never wire, especially hundreds of thousands of dollars. That's the ugly. That's the good, the bad, and the ugly. Thanks. And for the inspirational close, I'm going to take a page from Jim Rohn, who said, don't wish life were easier, wish you were better. Well, I personally am not going to wish video were easier. I'm going to wish that I were better, and I'm going to try to be better each and every time. Thanks so much for watching. I appreciate your feedback. I appreciate the fact that you'll share this with your friends on Instagram, Facebook, YouTube. If you do have any questions or feedback, do send it to me. And if you do disagree with something that I said, please do reach out to me, and I'll be happy to tell you why you're wrong.